David Jones from New York. This is Bloomberg.
Huh?
We're about 5 minutes away from the opening bell in New York City this Tuesday morning. Good morning to you all. About 55 minutes ago, we had the most anticipated CPI print, maybe in history, and this is what happened to the equity market. Not a whole lot. S&P 500 futures totally unchanged. We recovered from the losses of this morning after the CDC and the FDA recommending a pause of the J&J vaccine, and the Biden team, I think in line with the expectations of this market really, indicating that the shots from Moderna and Pfizer can meet the demand of this country through May. That's good news. Equity futures unchanged. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Berenberg upgrading Mosaic to a buy with a $40 price target. The analyst seeing a favourable outlook with rising inflation boosting pricing power. That stock is up by 1.7% in the pre-market. Your second call, it comes from KeyBank upgrading FedEx to overweight with a $350 price target. The analyst expecting delivery volumes to remain elevated throughout the year. That stock is up by about 1.23%. And your third and final call, it comes from the team at Deutsche Bank placing a catalyst call sell idea on 3M. The analyst highlighting management's recent warnings on supply chain headwinds. Might hear much more of that through earnings season. We're down there by about 0.7%. Up next, earnings season, kicking off with JP Morgan with the big banks on deck. That conversation up next with BlackRock's Michael Fredericks and Bank of America's David Jones. The opening bell just around the corner. This is Bloomberg. 25 seconds away from the opening bell in New York City this morning. Good morning to you all. We're set up as follows on the S&P 500 going into the cash open. It's totally unchanged. Near record highs at 41.20. On a Russell, we recover the losses of this morning. Unchanged there too. Let's call it down 1/10 of 1%. And the Nasdaq lifting up by 64. We advance about 0.5 of 1%. There's your opening bell. Switch out the board into the bond market. 10-year yields looks like this. You're going to confront a ton of Fed speak in the next couple of hours. 24, 48 hours. You'll hear from pretty much everyone. Yields 166.59 on a 10-year. The Fed has a plan. It's about to get punched in the face by the data. Yes, I'm alluding to that quote from the great philosopher Mike Tyson. You have a plan and then you get punched in the face. Retail sales coming up on Thursday, except to be absolutely explosive in America. I've gone through some of the estimates. 10% is what the team at Bloomberg Economics are looking for, there and thereabouts. In the FX market, euro turning high. Euro dollar 119.33. We advanced there 0.2 of 1%. And crude with a 60 handle, 60.29. Call it 60.30. Up by about 1 percentage point there on WTI. Let's head to the market desk and get some movers. Here's Abby.
John, let's once again start out with the shares of J&J, which are down sharply. This, of course, after the U.S. government, specifically the CDC and FDA this morning, recommended an immediate pause in the use of their single-dose vaccine. This on rare blood clot issues in 6 women between the ages of 18 and 48. Really an abundance of caution. And just recently, as you were breaking the news, the Biden team sees Pfizer and Moderna meeting the U.S. shot demand by May. So if we take a look at the other vaccine makers, well, actually, at this point, AstraZeneca, and they, of course, had the blood clotting issue earlier, but then it was seen that the safety or that the benefits overweighed any risks. But at this point, you have Pfizer and Moderna fairly higher on the idea that supply and demand are not going to be all that disrupted by this pause of the J&J shot. If we take a look at the travel sector, airlines and cruise lines specifically, some declines, perhaps some fears that maybe fewer people will be traveling. But I think the bigger point here, John, is these stocks have gone so far so fast, just a little bit of a pause. And then finally rounding it out with some of the theme parks along with casinos. It's very interesting. Disney and Six Flags, those are outdoor parks. Those stocks are down just a little bit. The stocks that are down more, indoor casinos. So it'll be very interesting to continue to watch this as this story plays out, John.
Abby, thank you. Thank you very much. Let's turn to the price action. Unchanged on the S&P 500. Bottom of the pile, financials down 0.6 of 1%. Going into earnings season tomorrow. Top of the pile, information technology up by 0.5 of 1%. In line with the outperformance you see on the Nasdaq this morning. Going forward, it is about the earnings. Will it also be about the margins? Pricing pressures on the rise, threatening profit margins across corporate America. Charles Schwab's Kathy Jones seeing little to be concerned about.
Probably have hit peak levels or are hitting peak levels, and will get squeezed with the rise in some costs. The earnings are still strong, the cash flow is still strong. So when we look at companies being able to meet their requirements in terms of interest payments, we're not too concerned about it right now.
Kathy Jones there of Charles Schwab. Let's bring in Bloomberg's Kaylee Lyons for more. Hey, Kaylee.
Hey, John. Well, clearly expectations are very high as we head into this earnings season, but that doesn't mean that people aren't considering the risks that could be coming surrounding the outlook. One of them being those rising price pressures. We've seen that evident in the data, those base effects kicking in, that affects not just CPI like this morning, but also that upside surprise on the PPI data last week. And those higher input costs could result in margin compression and therefore lower earnings, though history suggests companies